Hi, good evening, everyone, and welcome to the Let's Talk About Market episode number 71. So, if we see today, the Nifty index has broken below the 40-hour exponential average, and which I mentioned yesterday that it was a very important level. And if we break below that, then there is a case of gap zone getting filled. What we have seen now is that gap zone is filled. There's still a big tug of war between bulls and bears because none of the important levels are broken on the downside yet. So, how do we plan for the coming week and what to expect and what are the levels to watch out for? We'll try and discuss that in more detail. Let me quickly share my screen and someone can please, if they can confirm if you all are able to see my screen properly and if you all are able to hear me properly. Okay, someone, if they can just comment in the chat box, it would be great. Okay, thanks for the confirmation. So, this is what, if you'll remember, we had spoken that somewhere over here, a bit of a pullback is likely. One of the reasons was that the RMI over here was in bearish mode. You can see over here that there was a bit of a divergence where index was rising higher, but the momentum was not picking up. So over here, initially the expectation was that there will be a pullback towards the averages and then maybe it turns around from here. So that was the initial expectation. But I had also mentioned that there is a case where a pullback can happen towards this gap zone. And if you notice, this gap zone is already, is almost filled now. So in that sense, somewhere around this 26,000 mark, I was been mentioning that, that is an important support level. So what it does over here will be very important to watch. And now the reason why I'm saying that we are at a make or break level is because, from here, e- we are somewhere in the middle. So now from here, either we have to go here, or if the breakdown happens, then probably it can go till here. And and if in case it breaks down and it goes till here, maybe in the future, I am not sure, but more further lower levels can kick in, like, maybe then even all those doubts will arise that can the correction extend till 25,300 also, and all those things. But mind you, these all things will come into play only and only if the Nifty index breaks and sustains below 26,000 mark on a closing basis. Okay. So that is the importance of this level. Now, looking at the data, what am I expecting? So see, as I told you, one of the reasons to expect a correction from here was, one is that the momentum swing, the early RMI was falling. Apart from that, if you notice, the early swing had also been to 80-85 levels, right? And from there it had cooled off. Average swing has just started to cool off today. So average swing is usually a bit of a laggard. And if you remember, the extreme short term setup is when, all the three comes to an extreme. So over here, in on the downside, especially whenever it comes to a red bar on the downside, you can expect a correction, maybe right away, the next day or in next couple of days. And this is what we have seen, right? Somewhere over here, this had come to red, this was overbought, and the average swing also got overbought the very next day. And from there we are seeing this minor correction. Now this is where my fear is that if the 26,000 mark breaks on the downside, then you can see the setup where swing also goes towards the lower end, this also eventually dips and goes to lower end. And this call minus put can end up spiking towards the upper end. That is the risk that will play out if at all the 26,000 breaks on the downside. Okay. But I have seen this many times that if a bull market has to play out, Okay, and I think we are still in a bull market. It's just that, whether this is a consolidation phase that is over, or do we fall till here, make a broader range and then move up. I mean, these are all the questions that are there right now, for which frankly even I am trying to figure out an answer. But in the medium term, I think there is no doubt in my mind that we are probably headed towards 28, 29,000, because of the reasons I have mentioned many times in the past, which is the FI's positioning and all those things. I mean, if you've seen the past 3 to 4 trading sessions, we have seen the FIs covering short. Now, today we'll need to see whether they have covered or they have added more. And more importantly, tomorrow is the not tomorrow, but basically on Tuesday we have the monthly expiry. So how are they positioned post the monthly expiry would be very, very interesting to watch. Okay. So that's there. And typically, as I have told you in the past as well, that if at all, the FI's positioning are at an extreme and on the downside, okay, then that's where you end up getting major bottoms and a good rally as well. Okay. So over here, probably since the start of Feb 2020, I mean the start of 2025 year, there seems like that there is some change in range that we have started to see. Okay, because now the FI's positioning are also going down to as low as 1,90,000, 2,00,000, I mean 2 lakh kind of contracts. uh, so need to see, but I still feel that at some point of time, I don't know when, during the next this new year, as we get into, that is 2026, we will get towards this extreme. And when that happens, maybe those are the times to worry. And to be very honest, if you ask me, like, when will it be the time when I'll say that there is extreme euphoria in the market. So for that, see, I mean, I'll give you the framework that I have in my mind. I don't know how exactly this will happen, but basically you need all the indicators on extreme mode. Okay, which means FI is being extremely long, then say clients being extremely short. Okay, where clients are extremely short. And over here I'm making a combination of medium term and long term, because those are important. The DIIs, which are more of a long term guys, even they are extreme short. Then you have, so all of you all know that future OIBA index is anyways at an extreme. The only thing is that the medium to some long term indicators are still suggesting skepticism, but this is anyways at an alarming rate only. So the last one would be 14 PCR. Okay, when when 14 PCR comes towards uh, this lower end of the range, and of course, in this, basically we end up seeing divergence in breadth and all those things. If these sort of signals occur, then probably I would say that get away from the market for 1 year, 1.5 year. Maybe there will be that slow grinding correction that can eventually kick in. But I still feel that we are far away from calling like a major top, or big correction and all those things. I think until these all extreme reading doesn't occur, where FI goes to other extreme, client goes to other extreme, DIs become net short, then put call ratio goes to the volume put call ratio, I mean, that goes to 0.43. Until those all things don't happen, I think we are good. Maybe what we might end up getting is some bit of correction. It can be 3, 4, 5, 6% kind of correction, and then we might continue to move on on the upside. I mean, that is how I'm thinking at this point of time. uh, so yeah, so that way, I mean, the main game I feel over here is that trying to be a little patient and finding out when where will the correction end? Like, is it here? Is it here? Or will it come over here all the way till 24,500, and after that it will turn around? I think that is the entire game, that we have to be on top of it. Even I am trying to find evidence of what is going to happen next, and that's why I am leaving with some framework. In the very short term, it is the gap zone, that is what I've mentioned as an important support level. I think if this gap zone is broken on the downside, I'll be very nervous and start thinking of downside possibilities up to 25, 25, what is this, 25,700, 25,300 kind of levels. And if these levels also break, then the risk will be that sub 25 level, sub 25,000 also we can go. But at the same time, if this gap zone is held, okay, and the prices break on the upside, then I'll be super bullish. Okay, so we are at a point where maybe, uh, I don't know when, but we should end up getting a trending move. And the fun part is that the VIX is also very low, right? I don't know. I mean, I just feel that given that the VIX is very low and we are at an inflection point, I don't know, maybe buying at the money call and put option might also end up becoming a great idea. Because I think that this consolidation has been too compressed now. Okay, so again, I mean, this is not a recommendation, but just a thought process of sharing that VIX being at 9, we being at important level where you might end up getting some trending move, I would imagine. So given that is the backdrop, then it is very much possible that we form a position in such a way that we can capture both upside and the downside, whichever way it goes. And for that, there are many of those option strategies that you all can follow. But I think buying into the option strategies will make more sense. That is because of the very low VIX. Okay, the other thing that I was watching, and over here you have to understand that everything over here will become in relative terms. Okay, which means that you can see that there is a nice turnaround that we are now seeing in the uh, metal index, right, on a weekly chart. Now this is a very good sign. uh, In fact, if you see, there is oil and gas which is now trying to make a comeback. Infrastructure is now trying to make a comeback. So these are three sectors where I could spot that there can be some outperformance in the near term. That is because their relative strength has improved and the momentum has stopped falling. In rest of the cases, we have to go case by case and possibly try and see where is it that the opportunity is there. But these are the ones. I mean, metal is very very clean. Now, as I mentioned, if the 26,000 breaks on the downside, then it can still mean that the metals will outperform, but outperformance will not necessarily result into positive return. This is something that you need to keep this in mind. Okay, when the markets are falling and something is into leading or weakening and trying to turn around from weakening, it does not necessarily guarantee you a positive return, because it will just say that relative to the Nifty index, which has fallen a lot, these index might fall less, in case the breakdown happens. So this is what you need to keep in mind. Okay. Apart from that, the only bit of a worrying part is that, I mean, if you see the Nifty Bank, Nifty Private Bank, Nifty Financials, in all these cases, though, they are losing momentum, and Bank Nifty is an important part of the Nifty index. So at some point, you would want a bit of a turnaround happening in these sectors, and that is what I would watch out for. Nifty IT is already doing pretty well, because it is seeing nice uptick in momentum as well as relative strength. So yeah, I mean, maybe in the coming days, for sure, the index to watch out for. In fact, in the coming weeks, the index to watch out for will be metal, oil and gas, and infrastructure. Okay, and in the other ones which are turning around, it would be media. But as I told you, I mean, in Nifty media, it is largely dictated by Z, and Z does not necessarily has a, I mean, has a good name, so over there. But of course, I mean, that said, it's very cheap in valuation, and all those things are already there. So again, people can consider their risk appetite and accordingly plan the trades over there. But as you can see over here, there is some turnaround that we are seeing in Nifty Energy and Nifty PSE, and these are early signs of turnaround. So again, I mean, if you ask me which can be the dark horse, these guys can be the dark horse, which is the Nifty Energy and Nifty PSE. And in terms of which is doing bad, I mean, consumer durable is the one that is doing bad. Reality is the one which is doing bad. You need to keep a very close eye on Bank Nifty, Private Bank, and PSU banks. Okay, because over here, I mean, while this week, PSU Bank has gained some momentum, I mean, some relative strength, but the momentum is continuing to fall. So momentum falling is never a good sign, because that is a precursor to the relative strength, which might also end up going down. So please keep this in mind. Okay, so I think that is broadly the thing that I have. The main highlight is that the Nifty index is at a very, very crucial juncture. 26,000 on the downside is a very important support level, and if that breaks on the downside, I mean, things can get ugly in the short term. And similarly, on the upside, 26,300 is an important resistance level, and if that breaks on the upside, then I think the possibility of 29,000 on the Nifty index would very much open up. So that's how I am thinking at this point of time. I mean, if you all have any inputs or any important observations, please do let me know. It will probably help me a lot, you know to build a framework for myself as well. Baburaj says that what are the key levels to watch on daily swing? So daily swing, it all depends on the Nifty index, Baburaj. The daily swing is way too fast, and it can remain. I mean, when there are heavy declines, or when there is a sharp bear market, uh, it can remain in single digits for many days, and it can sweep everything. But of course, these all things happen in extreme markets. But the simple idea of swing is that if you are in an uptrend, okay, which means that if the Nifty index is broadly above the averages and making higher high, higher lows, then around 20 or 10, you will end up getting a bottom and a good short term swing. Okay, I mean, this is the very simple way to think about it. But in this case, the only thing is that you need to know the trend. I mean, that is what would become very, very important in case you want to trade swing. Similarly, when we are in a downtrend, basically, okay, as you see over here, when we are in the downtrend, at that point of time, every pullback towards 80 or so will end up, I mean, over here will end up becoming a shorting opportunity. Now you see over here. So identification of market is very important, and if you overlay that to swing, you can end up getting good, very short. I mean, good short-term trades on the upside as well as on the downside, depending on what broadly the trend is. So that is how I look at swing. And average swing is so you please understand that if swing has come to the overbought and the Nifty index is in a downtrend, so even a 2-3 days kind of fall can get it back to oversold zones. Okay, but when the trend is down, I may not necessarily want to take oversold very seriously. I mean, I may not use it for buying it, but I may use it to cut my positions and probably tighten my risk management, if at all I am a short-term trader. So that is how I think about it. ईयरली प्लान का अमाउंट 500 इसमें जीएसटी इंक्लूडेड है? यस, यस, जीएसटी इंक्लूडेड है. So whatever is the rate that you are seeing, we are not putting those thing that base price is this, GST is this, and your total is this. Whatever amount you see is basically all inclusive of GST. Okay, yeah, thanks, Babura. You can also, meanwhile, you can also go to the sentiment indicators, and you can find over here momentum swing. It's explained over here. It can give you some, it can give you a fair bit of idea about it. Any other questions? Any other questions, please let me know. Any other questions, please let me know. Okay, I think I can't see any questions. I'll wait for uh, probably 30 seconds or 1 minute. And if there are no further questions, then we can wind up the session for today. Okay, so I don't think I can see any further questions. Uh, okay, and Setiji says, explain Bollinger Band. So Bollinger Bands is nothing but trying to understand the upper and the lower end of the range. So the way basically Bollinger Bands are designed, uh, so you can see that these are the three lines, right? Wait, let me just remove this. So this is what Bollinger Band consists of. This is the middle line. Okay, middle line is nothing but it is called as the average line. Okay, so average line over here, the period is 20 DMA. Okay, 20 simple average. So we basically take 20 day ka period ka price action, and we run the average on that. So usse 20-day average milta hai. Whatever is your average, we consider two standard deviation up and two standard deviation down. Okay, so that gives us a band. Okay, now statistically it is believed that 95% of the time prices will remain within this band. So the idea of Bollinger Band is that when it is trending higher or it is trending lower, it will sort of help you to understand where the upper band or where the lower band is, in case if the prices are above mean, I mean above the averages or below the averages. So that is what essentially Bollinger Band helps us to understand. Sugar rally, I mean, so far, I don't think we are seeing, but we are definitely seeing, momentum is now, starting to either rise or turn around. Okay, so what I mean by that is that if you go to this, if you see the expanded version, okay, so there are few stocks, which has come to our radar recently. So over there, what is essentially happening is that the price action is now not falling, and rather, in many of the cases there is momentum that is giving, that those are giving signs of a bullish crossovers. So we can kind of imagine that, now maybe worst could be over. And also, on trading view, I have this thing. So over here, if you notice, I mean, sugar has fallen almost 50% from the top. Okay, so somewhere, if you see over here also, the momentum is now trying to turn around over here. So somewhere the hope is that, maybe this bigger correction that appears to be complete, and maybe, we can end up getting bounce or up move or whatever it may be. So that is the whole idea. So in many of the sugar stocks, if you will notice that the monthly RMI is now, trying to turn around. In some cases there has been a bullish crossover, but in some cases the bullish crossover is not yet confirmed. So the NCT, the upper and the lower line is, you can kind of say that those are extremes on the upside and on the downside, which means that if the prices are rising higher, there is a very high chance that around those upper line, index or stock or whatever it is might end up facing some resistance. And the whole idea is that after going towards the upper line, there can be a correction or a consolidation. And in case of any correction or consolidation, the average will act as a support or resistance level, depending whether prices are above or below that. So that is the whole idea of Bollinger Band, and that is the whole idea of the upper band and the lower band. So these are especially true in case if the markets are trending very, very strong, and if the prices go above the band or below the band, okay, then you can safely say that, boss, they have gone way ahead of its time, and a correction sooner or later is likely. Okay, sooner or later it would be likely. That is what it broadly indicates. So fine, I think I can't see any more questions. So that's it from my side for today. I mean, wish you all a happy weekend, and let's catch up on Monday and see, if we end up getting some trending move. Because remember that we are now reaching a very, very important level, which is 26,000 on the downside. Okay. So that needs to hold. If that holds, then, the tug of war between bulls and bears will still continue. So broadly, to summarize, 26,300 on the upside and 26,000 on the downside. These are the broad levels that you all need to watch in the near term. The breakout on either side will lead to a trending move on that side, which means that if 26,000 breaks on the downside, then you might end up seeing trending move on the downside in the near term. And similarly, if 26,300 breaks on the upside, then you might end up seeing, trending move on the upside in the near term. So we are very interestingly poised. There are few indicators which I mentioned how they are going to behave, like swing, average swing. I mean, if you all missed it, go through this video. I've mentioned what is it that you need to look out for, and how can these indicators behave around the overbought zone. So, try searching for those patterns. I mean, how does it play out in the coming days? Of course, we'll be talking in every session about it. So let's check and let's see together, how these things unfold. Okay. So once again, thanks a lot for joining, and let's catch up on Monday at 5 p.m.